continue on with the event today, I want to introduce Vinroy July, who will moderate the Young Black in Investment segment. He's right here behind me. There you go. Hey, how you doing? You're going to go on stage. Go to your chair. He is currently a partner in the corporate practice group of Dickinson Wright Law Firm. His practice includes a wide range of corporate and finance matters, focusing on mergers, acquisitions, and general corporate counseling. He has written extensively on the power and potential of opportunity zones and other capital raising mechanisms. Let's welcome him to the stage and the panel of the Young Black and Invested session. Thank you.
Hey y'all, how exciting is this? How exciting is this? This is so happy to see you all here. It's gonna be a great panel. Allow me to bring up my panelists. First, I would like to call up Yannick Cujo-Virgil, who is a principal of Merlin Acquisitions, a real estate investment and syndication firm. Merlin Acquisitions' primary focus is to provide risk-adjusted, value-added, opportunistic real estate investment opportunities to professional athletes. Yannick is also the host of the Mogul Marathon Real Estate podcast. Prior to real estate, Yannick played linebacker in NFL for the Tennessee Titans and retired in 2017. Yannick. Then we have Imani Yassin. She was a Baltimore native, committed herself to the community development by leading and working alongside youth and adults for over a decade. Currently, she's a director of strategic initiatives at Parity, an equitable development company headquartered in West Baltimore that acquires and rehabilitates abandoned properties to create affordable home ownership opportunities. Imani. Armstead Jones. Armstead has extensive experience in real estate development, real estate analysis, deal transaction analysis, and market research analysis. He's currently working on the Upton Gateway project, which is breathing new life into that area, two main blocks of Upton area, Armstead. And India Whitlock. India, another born and raised here in Baltimore with 15 plus years of real estate career experience. She started her own mortgage subsidiary, then became a licensed title insurance producer and founded a Team Settlement Services. And she's also a top producing real estate agent in the area. And then we have the Charm City Buyers, Kiara and Khalil. Kiara is a co-founder of Charm City Buyers. She has expanded her holdings to not only include rental properties, but also provide opportunities for home ownership. In 2021, Kiara became the majority owner of a full-service MBE general construction company that has completed 300 plus houses here in Baltimore. And Khalil, a second half of Charm City Buyers, has rehabilitated vacant and blighted properties for residential resale since 2012. He has been the lead developer at Henderson Crossing, an $18 million for-sale residential development consisting of 53 historic rehab units located in East Baltimore, and the Packing House, a $24 million adaptive reuse and historic preservation project involving higher education, emerging industries, and the investment community. So please give my panel a round of applause. So first, before we start, we're about to give you a whole lot of information. So I appreciate the fact that we're networking and such, but please, I've been asked by the organizers to ask for everyone to just keep it down a bit so that we can hear the panel. Very much appreciated. So look, I'm excited about this panel, right? So I'll give a little bit of background. I went to school down in North Carolina, and so I saw the impact, the economic impact that the CIAA had on North Carolina. And so when they said they were coming to Baltimore, I was like, oh, we are going to take advantage of this, because if for anything, we want to make sure that the people in this room, people in our communities, get to benefit from the same economic advantages that we saw happen in Charlotte, right? And so we have put together a panel that can talk explicitly about what's happening in Baltimore, the development that's happening here, because we're out here taking back the block. These individuals are people that are here working every day to actually do the projects. And so we want to make sure that we get an opportunity to talk to them and have a wide range of skill sets, from financing to actually the real estate development work that's going to help to empower the advancing of Baltimore, right? I mean, I hope that you all see and are excited about what's happening in Baltimore as I am, right? There's so much movement. There's so much development, and like every day we recognize that this city is changing, and it was like perfect timing for CIAA to get here so they could get to see it and get to live in it as well. However, and I did not introduce him because he was my secret weapon. You could not talk about development in Baltimore without speaking about David Bramble, my man right here. And so I just want to give Mr. Bramble an opportunity to talk a bit about why he is so heavily invested here in Baltimore, what he sees is happening, and why he's putting his own money where his mouth is and trying to make sure that we get returns, and why make sure we get some of the advantages that are happening in Baltimore right now. Mr. Bramble?
Thank you. I'm so glad to see all of you out here, but I am so proud of these folks sitting up here. I'm from Baltimore. I've lived here my whole life. A lot of folks here I see around the room from Baltimore, but then I see a whole bunch of folks I don't know. How many people are not from Baltimore? Oh man, you guys are in for a treat. Baltimore has a bad rap sometimes. It really does. But I gotta tell you, what people are missing is that you are now sitting in the best opportunity in this entire country for upside growth, all right? Let's just talk about this for a second. A lot of folks like me got into the real estate business and started in the real estate business by rehabbing homes, right? And what's the first thing they tell you? You wanna go to the worst house on the best block, right? All right, now let's think about what our block is. Our block here in Baltimore is not Maryland. The block is Washington, D.C. to the south and Boston to the north. You are sitting in the last major opportunity on the East Coast in the most productive economic portion, frankly, in the world, Washington, D.C. to Boston. And we are sitting here with huge opportunity, and you're sitting here with huge opportunity that can be led, quite frankly, by black folks. So let's speak specifically, right? So Baltimore, Maryland, right? We're sitting in Baltimore. How many law schools in the state of Maryland, in the entire state? Anybody know? Where are they located? How many medical schools in the state of Maryland? 2. Where are they located?
Baltimore.
There's going to be one more coming to Morgan State University. Where will that also be located?
Baltimore.
Okay. We have Hopkins, we have Maryland, we have Mercy, we've got Kennedy Krieger, we have LifeBridge. You have the largest roll-on, roll-off port in the country. Anybody know what a roll-on, roll-off port is? It's a port where things with wheels come off of boats like cars and sit, okay? We have the furthest western inland port in the entire country, furthest west inland port on the East Coast, right here in Baltimore. You can reach 130 million, a third of the population of the United States in one day from this city. We have very low real estate prices, although we don't have very low taxes yet.
Or low rehab costs.
We have 95, a highway that connects the entire East Coast, runs right through the middle of the city. You have a train station right in the middle of the city. You have major historically black colleges and universities right here in the city, and then of course in the state of Maryland. I think the state of Maryland has 5, right? It is a tremendous opportunity. So when people ask me, why are we investing in Baltimore? We invest all over the country. Why are we investing in Baltimore? Because we see the upside. And I'm so glad that you all are here today to listen to these young folks talk about the opportunities that they're seeing. But it is going to be a very big opportunity. And don't miss it and then come back in 20 years like, man, I can't believe they built all that and pushed us out. I don't want to hear that crap. You knew about it right now, I'm telling you. So come here, bring your dollars, bring your expertise, bring your strategies. We want to see it happen. The financial community, as you can see from the supporters of this, they see the opportunity. They're ready to help you and support you. And there is when you get a chance to really dig into it and hear from some of these folks, I hope you get as excited as I am. Thank you.
So I realized that when I was giving the introduction, I didn't give full context of who Mr. Bramble is. So I want y'all to understand what we're talking about here. This man developed one of the first opportunity zones in the country at Yard 56. So everybody was running around, and I'm an attorney, as I mentioned earlier, so I dug deep into opportunity zones. Everybody was running around talking about opportunity zones and how it was going to be transformative. But then once they started digging into it, they started figuring it was really hard to get the deals done. He did one of the first in the country. But even more recently, he just closed on the acquisition of the harbor. Like, do y'all understand? Like not like a piece, not like Tirnanog, like the whole thing, and has an ambitious plan to redevelop the harbor and make sure that when y'all come here, that place is active and economically booming. So I want y'all to really appreciate who Mr. Bramble is. However, and he talked about us youngins over here, although he's actually not that much older than us, but we'll take it. A lot of the movement in Baltimore is going to happen by our generation, like our crew. And so I want to talk a little bit about this, right? You know, Mr. Bramble talked about the fact that, you know, you don't want to see us come back in 20 years and say, oh, we didn't know it was coming. I told you I'm an attorney, but I'm also heavily invested in Baltimore. And why? I'm originally from Jamaica, moved to New York, and then DC, and then moved here. And I was in Harlem in the 90s, and I saw what was happening there. Then I went down to DC in 2000s, and I saw what was happening there. And now I came to Baltimore. And I was like, this feels real familiar. I've seen this before. I've seen this before. And so, just really excited about the opportunities here. And so I'm gonna start talking to our panelists. So I want you guys to start, and I'll let you all kind of just give a rundown. Kind of tell us your origin story. Why did you decide how did you get into real estate, and how did you decide to specifically invest in Baltimore?
Yeah, so a little bit about me. As you mentioned, I used to play in the NFL for the Tennessee Titans, and I wanted to get my start in real estate because I knew that a lot of professional athletes were just blowing their money on things that they're never going to see again, right? And I literally was doing it myself. My thing was, like, I spent $20,000 in 1 month in the off season my first year, and still to this day I have no idea what I spent it on. And so my journey and my goal is to provide, you know, risk-adjusted investments to professional athletes, business owners, regular W-2 professionals. And how I got my start into this game was working for this guy, because I knew that I wanted to get into the minds or work for people who are doing things at a high level. And this guy is doing things at a high level. So whenever you talk about doing larger deals or getting into the world of commercial real estate, you have to first get educated and then two, find the money, right? Because those two go in line with each other. So that's a little bit about my story.
Sure. Good morning to you all again. My name is Imani Yasin, and as it relates to my origin story, I'm a very proud, first of all, Baltimore native. I come from Charles Village and Waverly. In terms of my identity, I'm a hip-hop artist, I'm a public speaker, I'm a community advocate, and so I thought about investing in Baltimore, first of all, because it's extremely wise. And even though I don't come from the world of real estate investment and housing, I had the wonderful opportunity to join our team at Parity. And for those of you who are unfamiliar, Parity is an equitable real estate development company that's headquartered in West Baltimore. We acquire and we renovate vacant and abandoned properties by the block in order to create affordable home ownership opportunities, specifically as a means of racial justice, of wealth building, of civic engagement. And so when we talk about investment from our vantage point, we aren't talking about it from the sense of trying to make profit, but in turn trying to exchange extreme value to our potential home buyers. And so I, as a Baltimore native, see it as extremely important to be a part of the legacy that you mentioned and what you have contributed to as well. Just because one of our historical context, right, as it relates to housing and how we have such a unique opportunity, not just for us to make money, but to change the narrative around how so many people have attached a negative connotation to neighborhoods and communities that have suffered the long-term effects of disinvestment. So I'm proud to be here. I'm excited to be a part of the panel, and thanks for having me.
All right. Good morning. I'm Armstead Jones. My origin story starts in Baltimore. I went to the best high school in Baltimore City, Baltimore Polytechnic Institute. Then I graduated from Morgan State University, undergrad degree in industrial engineering, master's in systems, and I was going to go get another master's degree in real estate development because I didn't want to keep working for people. And then I decided to reverse engineer that. So I started working at the state housing department, where I was looking at the metrics, everything that was going out, home ownership, preservation, production, how tax credits work, started learning how to underwrite them, how to put the deals together. Grew a little tired of that because me working for people is a little difficult at times. So then I went to Baltimore Development Corporation and did all the land disposition, me and another guy named Patrick Terranova. And we helped, push out stuff. I learned the whole process of development from beginning to the end. I'm a Baltimore native, so I then decided that I wanted to go out here and do it on my own. So that was 2019. That's 2019. I quit my every 2-week paycheck having job and decided I was going to go and do real estate. And what happened? March 2020 happened. And I didn't know whether I could keep the lights on, right? But luckily I had a whole bunch of houses. Go figure, houses still sell, right? So I learned a valuable lesson about risk and what to do. But I'm bullish on Baltimore because, like Dave said, we have the best value proposition on the East Coast. Philadelphia, I was investing in Philly for a while. They've seen their boom, right? Baltimore is the only place that hasn't necessarily seen a boom, and it has to happen, right? We have a lot of great people, we have a lot of good talent, and there's a lot going on here. So that's my origin.
Good morning, everyone. My name is India Whitlock. I'm the founder and CEO of the Madison Mason Home Group. I am the founder of Madison Mason Homes, and I am the founder of the Simple Girl brand. I am in residential sales. From 2015 to 2022, I've sold $63 million in residential real estate. I've sold 297 homes. I'm working on my third from ground up new construction. I have 6 streams of income. I've been in the industry for almost 20 years, and I'm in direct relationship and partnership with MAG Partners, which is another developer over in Port Covington. And our mission and core values is really to create a better living together through real estate by providing sustainable opportunities for homeowners, for individuals like yourself. And most importantly, I'm here to really represent the underestimated, not only person in investment, but really the underestimated woman. My origin is right there as my mom. It's not too many people have the opportunity to have their mom in the space here. And I came from a single parent home. I'm a single mom of 2, as if, you guys need to know that, but that's important to know because a lot of times we come in these spaces, right? And we feel like we can't do that and we don't have a ticket to the table because everybody else is at the table. And I'm here to say we all have a ticket at the table. You have to write your own VIP invitation to the table. And it's important to have high-level conversations with people that can give you access to capital, people that want a sustainable opportunity, and for you to be in a room with people on your table or on your bench or on your bus that are hungry, not thirsty, because there's a difference. And especially in this room, and especially on this panel, we have a lot of thirsty people that want to come to Baltimore, but we don't have a lot of people that want to invest in Baltimore. We don't have a lot of people that want to show you how to invest in Baltimore and what it's going to take for us as a collective to really push the narrative, to really look at a David Bramble and say, hey, David Bramble is doing it, but we need to help him do that. And we need to help him do that by not having conversations around him or behind him, but having conversations with him and forming partnerships that are sustainable so that we all can have sustainable life. So, and that's all I gotta say, so.
Hi, I'm Kiara from Charm City Buyers. It's so great to see everyone and have a full room because we never miss a chance to talk about Baltimore or real estate. My origin story, people hear it all the time, but I'm gonna keep telling it, so you might as well keep listening to it. But in the early 1800s, my introduction to real estate, I heard a story about my family and how they started a town called Hensonville in Pennsylvania, about a couple miles north of the Mason-Dixon line in the early 1800s. And that land turned into the land, or part of it, turned into the land that Link University sits on, and they're over at the arena playing basketball. And so having that history and that foundation of community, of ownership, of building something bigger than yourself that lasts forever is literally in my bloodline. And so for me, and with us in our very first deal, we saw the value in turning vacant houses into homes and seeing the opportunity in our neighborhoods first. Right? I loved what Mr. Bramble said, and he knows how much I love him anyway. But knowing and understanding that, for me, Baltimore is the biggest opportunity to build Black wealth that there is for the reasons that he spoke about. And so being able to invest here is super important, not only for us, but for us to be able to leverage what we've done, what we've learned, and what we're doing to empower more people to invest right alongside us, because there's a lot of ways to get it done. And when we are intentional about how we do that, right, we're not thirsty, but we're hungry, we can not only build wealth for ourselves, but build wealth for the community. So excited to be here.
What's going on, everybody? My name is Khalil Ukhta, second half of Charm City Buyers. So my origin story, shortly after I graduated from college, I moved back home to Baltimore, lived in a room with my brother, lived back home with my parents, saved as much as I could, and then bought our first property, right? We worked together to purchase our first deal. 3-unit shell, we fixed it up. It's now home to 3 tenants. Fast forward to today, we've scaled and grown since 2012 to include a full-service general construction company, a group coaching program that educates and empowers mostly our people, mostly Black women, on the process of real estate investing. I see some of our folks in the audience right now. What up? From 2021 to now, our students have acquired over $20 million in residential real estate. How incredible is that? Over 700 people.
$20 million in Baltimore purchasing property. So proud of them.
Yeah. We buy, fix, and sell houses. Every house that we have sold has been a former vacant shell, completely blighted, full gut rehabs. We develop without displacement. And now we position our properties, we have consistently positioned our properties to leverage tax credits and grants to ensure that the closing costs for the buyers are as low as possible and that the construction costs are subsidized as we continue to be mission aligned with different communities. Our most recent venture, last month actually, we launched a vehicle through which folks can invest alongside of us so that we can all win together. And we're super excited about that initiative as we move well into the future, knowing that Baltimore City and the greater Baltimore area really is the home for the next wave of Black wealth.
So I think one of the messages that we keep kind of coming through in when you guys are speaking is this idea of like Black wealth. And there's been this renewed focus here on like Black economics over the last couple of years, right? Like, how are we, like, for someone that has never done real estate development before, you know, all you guys, while we're not Brambles, sounds much like more advanced, right? Like, how did you get into doing your first project? What's your strategy? Like, can you just talk a little bit about that, Khalil?
Yeah, I can start because the first one is still fresh on my mind. 10 years ago, right? So we bought it with cash, which I don't recommend, right? So step one, right? Find some money.
There's so much we don't recommend about that first property. It's amazing.
Yeah, exactly right. But we just jumped, right? You're scared, you're nervous, you got all this inertia pushing you in different directions, you got kids, you got spouse, you got all this type of stuff, but you got to take a leap of faith. right? At some point, your mindset has to kick in, and you got to know that there's a bigger purpose and a bigger opportunity for you. So that's what we did. We jumped into our first one. We didn't know what we were doing. We're young, we're ambitious, and we figured it out, right? We networked very well. We surrounded ourselves with people who had more knowledge in specific areas than we did, and we brought it together. We found a lender who was specifically invested in that area in Hartford, Connecticut. And we found a construction team that could help us bring that former blighted property into a home.
Armstead, same question.
So my first property was in Philly. Logistically, it was a nightmare, right? I'm driving an hour and 45 minutes one way to see if somebody painted the wall, right? Because he wanted to get paid, and he wants his money now. And he can't wait. He's going to pull off the job. He's going to, all the threatening things.
We have all been there, brother.
Look, and then you spend 3 hours and you realize, I'm from Baltimore. We have enough property in Baltimore. I don't have to run to Philadelphia to do this, right? It should be a 15-minute drive. Then once I left my job, I did something. I always do like strategic things, right? So I'll call him my mentor because he is, but he's also my business partner, Dean Harrison. Was like, all right, I got this project. You want to work on it? I was like, yeah, cool, let's do that. And then it happened to be the Upton project, right? So my first development deal was 38 units. And ever since then, it's kind of just been moving forward. But the whole thought was, and this goes back to me not liking to work for people. I was like, nah, Dean, don't pay me. I want ownership. He was like, all right, it's going to take a while. I was like, yeah. In the back of my head, I'm like, I have no clue how I'm going to pay my bills. So I then learned from him, who learned from Theo Rogers before him. There was Doug Moore before him, right? And now I'm working with these same guys, and I'll go to make a mistake, and Doug is like, yeah, don't do that. I'm like, oh, okay. No, don't do that. And then I just sit there and say, okay, great, I shouldn't do that. So go find a mentor, right? Like, that's kind of how I jumped into it. Because if you can find the knowledge, you can kind of eliminate a lot of the mistakes up front.
Absolutely. So do not recommend doing work for no pay. Definitely do not recommend that.
Gotta keep the lights.
Luckily, at that time, I was teaching classes. I would do consulting work on the side. I kept the money coming in, but the certainty of when that money would come in,
Yeah. So, India, I want to turn this to you because, okay, so we're talking about like doing development. So imagining most of that is just like, value add projects, right? So I, also do value add projects, but I am terrified of like ground up.
Oh,
and I'm just, And so
me too. I still get anxiety sometimes. But you just do it anyway. At the end of the day, I mean, years ago, I met David Bramble with one of my mentors, Mr. Muldrow. He's passed away. And you really got to realize, not to go back, I'm going to answer your question, but I wanted to piggyback on what you said, so I'm sorry. You got to realize who are your equity partners and who are your sweat equity partners. And I remember Bramble and I, we were talking about when I was coming in the game, he was on Charles Street at this big building, and I was going to be a sweat equity partner. And if you don't know the difference between that, it's someone who doesn't have any money, but has the knowledge and the smarts and the brilliance to really take something from the ground up. And then that equity partner, especially in this space, would be like a Bramble, would be like your community bank. It may be a local private sector or whatever. So you really got to decide, as far as the people on your bus and on your bench, who are my sweat equity partners and who are my equity partners? Because that's going to really tell you how you maneuver in this space. And we don't spend a lot of time talking about the sweat equity partners because we feel like we got to have this level of money in order to be a part of a project, but that's not true. That's completely not true. You got to have some level of knowledge, and then you and that person can form a collective together and really take something deep, not wide, in this industry. So back to the building aspect of it, I got in building because There were a lot of thirsty investors, back to that, coming into Baltimore wanting to grab up every piece of real estate and not leave enough equity on the table for the homeowner, not leave enough equity on the table for the investor. So I said, a friend of mine, his name is Trace Freeman, he said, you should get your builder's license. I was like, I don't know how to build houses. And he was like, but I'll teach you and you'll learn. So I was like, well, hell yeah, I'm gonna get my builder's license, right? Because the margin in building is bigger at times than a margin in just flipping a house. So my margins have been great. I haven't taken a loss, but it takes time. And it's a matter of how much you're gonna invest, how much time, who are the people on your bus that you need? And y'all need to write this down. Everybody's nodding their heads like, yeah. Write this stuff down. Because this might be the only time you get an opportunity to speak to all of us for 5 minutes, an hour, because a lot of us only got 10 minutes to give you. So I would tell you this, when you are constructing your real estate team, you find the people who have the money. Then you find the people who have the time. And then you find that deep portion, which is the grow deep people, your bank. They are your local banks. Don't sleep on Harbor, don't sleep on People's Bank, don't sleep on M&T, don't sleep on any of those community banks, because they're gonna invest more into you than you go upscale to a Bank of America who's really not gonna pay any attention to any diversity, inclusion, or anything within this community. So you build your bus like this. You had the equity partner, you got the sweat equity partner.
Shout out to our
Let's
sponsors.
go ahead and also say, believe in your Wells Fargo's, your Fulton Banks, your PNCs, your M&Ts, your JP Morgan Chase, your Care First, your Under Armour, your White & Turns, your Verizon, your BWI, all of them.
We will
believe in all of them.
But listen.
Invest in us.
I hear you. And that's the problem. Sometimes we get in relationships with people that don't invest back in the community. And we got to rethink all of that stuff again to come right. So when we have these conversations, they are acceptable for everybody. I had to get down because my feet was swinging. But on the same token, when you build it, you have your sweat equity partners and you have your equity partners. And then you have your bank. And then you decide, who is that contractor going to be? Whether it's going to be Natasha Mosby from the McKinney Group, they have $1 billion worth of residential sales. Probably the biggest developer in DC, black developer in DC, Kimber, McKinney Group right there, and you can get that knowledge for them. So you build the construction team. And then we really got to make sure we support local contractors. And you vet them. And don't look at people because you see them putting luxury tile on something. Look at their profit and loss. Because a lot of times we sit on these panels and we don't even look at our profit and loss. We might not even be profitable, but we can sit up here and tell you how to invest.
All right.
That's not fair to you guys because we're misleading you down this road. It's really a rabbit hole.
All right.
So you really find the people. But look, I let you talk. Look, we only get 1 hour to make a difference. So you find your equity partner, you find your...
All right.
You find your community partners and then your contractors. And the most important thing is find a designer and an engineer.
All right.
So I don't got to speak.
Cool. All right, there we have it. So one of the things that has been running through, so I'm glad you guys actually teed up 2 questions that I have, both for Imani and for Yannick. So when you start talking about like finding, but let me actually back up because I do want to touch on this equity piece that we've been talking about. So, you know, I think one of the reasons why we wanted to get this group together is there's money to be made here, but you can do it in a way that makes sense and is fair and is not exploitative and takes care of communities that are there. Because I always say black people deserve nice things too, right? Like this idea that every kind of development is bad is just not true. And I know that Khalil and Carrie have talked about that, about the idea that they are doing development, that they're not kicking people out of houses, they've been vacant, so I appreciate that. But I know Imani, I want to talk to you because I know that parity is specifically going in some of these neighborhoods that have been disinvested in for so many years and trying to really take advantage of that. And I think that that's honestly one of the biggest stories about Baltimore is that the opportunity here, because of the history of gentrification and these neighborhoods being underinvested in, and how we can try to change the narrative about those properties. So if you can just talk a bit about like the path that you guys are going through with parity and how you guys are going to address those issues.
Yeah, well, I think the first thing to mention when we talk about vacant and abandoned properties in the city of Baltimore is that there's so many, right? We have between 14 and 15,000 vacant properties. When we talk about the investment in Baltimore and people moving here, I think in 2021 there was about 575,000 people living in the city, but we have the space, we have the network, and we have the houses where we can support an influx in our population. So that's number one. I mentioned this earlier, but I think a big piece of our work and what we have developed the strength in is storytelling, right? It's about being able to speak to not just the negative connotations that we associate with these neighborhoods, like it's drug infested, like it's crime, like the underperformance in schools, but really focused on the resilience, right? The fact that there are still homeowners in these neighborhoods and these communities who take pride in where they live. The fact that Baltimore is surrounded by so much backdrop of natural beauty and in the community in our footprint that we work in, we have a lot of green space, we have parks, there are several churches, there is a school, there is a recreation center. So we really looked to build from a place of strength and utilize pre-existing resources. And I think when we talk about that too, the biggest commodity, in my opinion, in this city is the people. It's not just about the fact that you can find a house and finance it properly, but it's about who you decide to bring along that journey with you. So I think a big part of our work, again, is reclaiming that narrative and then giving people a chance to own property, because we know home ownership is a big tool in helping to diminish that racial wealth divide and helping to push forward equity and wealth. And so we talked earlier about Baltimore being a huge opportunity zone, but I think it's imperative as Black folks specifically, we think about home ownership simply because we know that to every $100,000 in white wealth, Black wealth sits at about $13,000. And even when we're more educated, we still hold less wealth. So our mission at Parity is to give people an opportunity to, one, have nice things too. Our properties are between 2,700 and 3,000 square feet. They're going to be completely renovated from top to bottom, similar to what y'all are doing. So we have a unique opportunity to present people with, a place where they can plant roots, where they can be, happy in their homes with them and their families. So that's what we're doing.
Perfect. So quick, we're going to transition shortly into, if anybody has any questions that they want to ask the panel, please just feel free to line up by this young lady in the purple jacket or hoodie, sweater, hoodie thing over here, and just ask questions. So I do want to talk, because we got to get to the meat and bones of this, right? So everybody, you can talk about how much you want to build these houses and you could do these things, but everybody knows that one of the biggest obstacles there is around the financing. And I know we talked about finding the equity partners. Yannick, I know that you are doing syndication deals. Can you just talk about how, and honestly for the rest of the panel as well, how are you guys going about financing these projects? How are you guys bringing money to the table? How are you getting people who are willing to invest in Baltimore and see the potential greatness in Baltimore despite some of the negative things that you often hear? So I'll let Yannick start, and then anybody who wants to take it can jump in after.
Yeah, that's a good question. First, by educating them. We always educate our investors. Most of our investors are retail capital. Like I mentioned, in the NFL.
What's retail capital?
Yeah, retail capital is pretty much your everyday investor, right? Folks who go to work every day, you might own a business, and so you're kind of in that retail capital space. And, the money is the most important part, right? There's this hot thing right now talking about apartments, and everybody wants to own 1,000 doors. To get to that, you have to find the money, right? And how you do that is just by, reaching out to people in your network, whether it's social media, creating a brand, attracting the audience that you want to invest with you, your target avatar, figuring out, is my product really going to provide value to that person? Whether it's on the NFL side, providing them with investments, whether it's from the business owner side, allowing them to reduce their tax liability, things of that nature. You want to go out there and you really want to put yourself in the light that allows you to show that your investment product is something that your audience needs. And the way that we raise capital is through a syndication process, right? So essentially we, file with the SEC, and it allows us to raise capital from accredited and non-accredited investors. And when you do that, now you're putting yourself in a situation where you can tackle some of these larger opportunities. But the thing with these larger opportunities is that, as you scale and you grow and you grow and you grow, you want to make sure that your infrastructure is really, really important, right? Because if I'm going from one deal to the next, I want to make sure that my investors behind me are still getting serviced, right? Whether it's getting an investment portal, now they log in, they get all their tax information, or giving updates on a monthly basis, all the updates is through the investment portal, or being in a position where you can hire other people, whether it's virtual assistants, a warm body hire that allows you to scale your company, right? Because in the big world, right, acquisitions is the most important thing, right? You want to acquire more and more deals. That is how the revenue comes in. But if you're not able to make your investor happy, which really is the lifeblood of your business, right? Because for every dollar that your investor invests with you, you can go out and buy more and more properties. When I first got in, I didn't imagine raising, we're in like 7-figure raises right now, right? I didn't imagine raising, let alone 10,000. Now it's 50, 100, so on and so forth, right? But a lot of that stuff really just came from the education aspect, surrounding yourself with the good education, the good team, learning from people like Bramble. I know we talked about him a lot, but definitely this guy right here, because someone that's from a background, he's from Baltimore City too, right? Someone that's from Baltimore City had no idea what an MBA really was. I went to, I played football, wanted to own a gym and right off to the sunset after 10 years. I had no education in finance, but being able to pick up a book, YouTube University, Google University, learning from folks, that's really how you get the education to have the confidence to go out there and raise that type of capital, and then also provide your investor with a quality level of service. So that's how we finance our opportunities.
So I do want to just, because I love the syndication and all of that, but I do want to just point out one of the things that I've appreciated about being in Baltimore is that because of the prices of housing and the availability of houses, it's not necessarily that you don't have to always syndicate deals. Like these projects, you can buy, I've been able to buy a block of houses from the lowest price being $26,000 to the highest price being $52,500. We just got an appraisal back for $205 on one of those houses. They're just going to keep going up. And so I think one of the greatest opportunities about Baltimore and why we need more soldiers, like I think of myself like a soldier, right? We need to support people like Bramble and some of the other developers by us buying up the individual houses, and you can really start to transform neighborhoods. And with that, I'm not cutting you off yet. I'm going to give a plug for our event that's happening after this. So, consistent with that idea, after this we're doing a bus tour, calling the Take Back the Block bus tour, where we're going to actually go and look at sites that have been developed by other young black developers. Armstead's project will be along the tour. My project will be along the tour. We have 2 other young black investors who are doing, Chris and Fume, his project will be on the tour, and Alex Aaron's project will be on the tour. So if you're interested, please talk to me about that, and then I'll let Kiara just give us a final talk, and then we'll take the questions that are over here.
So Chloe and I started investing at like 22 and 23 years old. So I don't know about y'all, but we didn't have a trust fund, and we damn sure didn't have an uncle or a daddy or grandfather who had been investing in real estate. So we had to figure it out, right? And so we had a goal. We had Chloe moved back home with his parents. I had a roommate. We stacked up cash. That cash was supposed to be for our wedding. Sorry, Mom, I have not put on the dress yet because we bought all these houses. So the money from our wedding, we actually put into our first projects. We bought it cash, but it needed $120,000 worth of renovation. I ain't have that. So we networked, right? So we were able to connect with a local small nonprofit that was doing development that funded $120,000 to do that rehab, right? So it's about what room are you in? You guys are in this room for a reason. Make sure you take advantage of that. Those of you who are on the bus are on there for a reason. Connect with the people who are there. Talk to the other folks who are part of that bus. We do bus tours all the time. I'm excited about having other folks that you guys can see as well, because it's definitely not just us. I just happen to be on the Instagram with the phone all the time. But so we had the nonprofit that funded that deal. We've done seller financing. We negotiated with the seller to say, I know you want $100,000 now, but what if I pay you $1,000 a month for the next however much time, right? We have done syndications. We've worked with other people to say, how do we put these things together? We've done hard money. And in Baltimore, that means you need to know and understand valuations in the area that you're in. Baltimore is block to block, right? So know what block you're on. Don't run because something's cheap and think you're going to get something done, but pay attention to what's happening around you. Hard money is short term, so that also means your team has to be tight. If your contractor doesn't show up on time to meet you to do your bid, why do you think the framing will be done on time, right? Pay attention, right? So then you have your funding. So your hard money lenders is short term, so pay attention to what you're doing. We've done things with banks, we've done tax credits, we've done all these things, but it all happened in time as we continue to learn, as we continue to upgrade our mentorship around us. And the biggest thing I think that folks really need to do, we're going to harp on this, I think, all the time, is your knowledge and education so that you understand what decisions that you're making and why. And two, having the audacity to go after it, even if you don't have the full picture at the beginning, because you won't. You're not going to know exactly how every step's going to come out. But if your goal is to get it done, then you need to put one foot in front of the other to actually get there.
Really quickly, how many people want to invest in properties, like physically, doing the work themselves, coordinating the contractors, making sure you go to the banks, okay. How many people want to invest more passively, where it's like, look, I have capital, I just want to park it somewhere and get a return? Okay, I see a few hands. So Yannick had mentioned a fund structure where anybody, it sounds like, can invest. We have a similar structure of a fund too. So if anybody is interested, shameless plug, we have a 5 p.m.
Don't violate the SEC rules, brother.
We're not violating at all. Yep. 5 p.m. tomorrow, we have an information session. If anybody wants to learn more, come see me.
We're not.
Cool. I'm an attorney, so that was just a disclaimer. This is not a market for selling securities or anything of the sort. I'll go over to the questions.
Okay. So my question is, so a lot of the focus has been on residential real estate, which is great because everyone needs a place to live, and I agree everyone deserves a nice place to live. But I live in Baltimore, I adore Baltimore, I see where it's going to be in the next 20, 30 years. When people are living somewhere and like planted somewhere, they need to have a place, they need to have a place to play, and they need to have a place to work. So I don't know if you guys have transitioned into more like commercial real estate or business partnerships, or you are partnering with people or companies who are doing that. But for those who are, what did that first step look like, for instance, going from residential into commercial or mixed use?
So I'm in the, if you don't mind, I can tease you.
You take the mic.
So I'm actually in the middle of this right now. I started just doing like single family renovations. And in fact, my first house that I renovated, I had nothing to do with the renovations other than to pick the fixtures, because I had moved back to New York for a year, and my buddy was basically overseeing the renovation for me. And then I came back, and then I said, all right, I feel like I know how to do this, and he helped me a little bit, and I kind of kept doing that. And then we kept doing onesie, twosie. So you ask about why we're focused on the residential. I think it's because that's where you start, right? You kind of earn your chops doing that stuff. That's how I earn my chops, at least. And then we bought a block of 6 houses. And now we just bought, with people who are in this room that we have as investors from this young black community that we have developed here in Baltimore, we actually just bought, and this will be on the tour later, a block. It consists of 11 commercial units on the ground level and 30 residential on block. We are trying to build a Black Wall Street, and I am unapologetic about that. It is right by the University of Maryland. And again, 11 commercial with 30 residential on the block. So what does that look like? The reality is that you're talking about like trying to getting funds to do a project like that. Banks ain't giving you money unless you can show that you have some experience. So doing the 1 and 2 projects is what actually got me my credibility with the banks, that they would actually like even talk to me about financing the project. I got rejected a lot when I was looking for banks to finance those projects. I ended up working with an organization, a CDFI, that was able to get me better, that was willing to be a bit more lenient with kind of lending terms than a traditional bank would be. And so they were able to give me the project, and we've been working on it. And it's a day, right? Because residential rules are different than commercial rules. You find out very quickly that, you got to put fire-rated drywall in between these commercial units because there's a residential person up top, right? But you learn these projects. Nobody is saying that this stuff is like automatic.
Right.
It's trial and error. I can't tell you how many times I got burned by contractors. I can't tell you how many contractors I've cussed out. I can't tell you how many contractors walk the next way when they see me. Right? That's just the reality. Sometimes you go through hard times, but I think everybody here can attest to the fact that you go through these hard times, you learn, and the next time you're better, right? And then you just keep going from there.
And
Oh, no.
India, go ahead.
the transition sometimes is also easy, right? We have a term we say it's the same amount of brain damage whether you do 1 or whether you do 100, right? So you might as well do 100, right? Like, it just makes common sense. So once you've done a couple projects, you then transition over. I'm crazy. I'm doing land development, right? Which is essentially finding land, building TOD, which is transit-oriented development, which is then a hyper-focus of building more density on a smaller piece of land. Once you start playing around with those ideas, you then say, okay, what other asset classes make sense to make money, right? Industrial is hot right now, right? Everybody is buying, everybody is building. So you just start thinking about to yourself, what projects makes the most sense for me to make money, right? Still have a living, but if I'm gonna do something, I might as well do something of scale, because if I'm gonna have the brain damage for 1, I might as well do 100, and just keep on moving that way.
I'm gonna let you go, and this is it's just bad. It's bad timing. We're gonna make we have a lot of questions, and so we just want to we're gonna try to condense our answers to 30 seconds to a minute, and so. India, you can let me give you a final thought, but let's so we can get to the questions.
A lot of us in this room just want either have a piece of dirt or a project, and sometimes we got to have a strategy of you might not be able to afford the house that is income and equity producing, and for me it's a difference. I use a strategy of, is it an income producing property or is it equity producing property right now? And if the income producing property is, hey, I might can only afford this $50,000 house somewhere in West Baltimore, maybe the block is a little shaky, but however, geographically, there's a cluster of renters in that space where it can span you over 10 years, so the cash flow is there, but the equity isn't there. But over time, you can reverse engineer that asset and turn it into an equity and cash flowing asset. So a lot of times if you're looking for your first property, it might you might have to crowdfund where you only can do $60,000. So that might be a cash flowing property. But the beauty of it, over time, it'll turn into equity producing, which you want to take out, reverse the equity, put it back into something so that you can get an equity and cash flowing property, and it's like a win-win for everybody.
Good morning, thank you. This question could be best for the brother who just spoke, but someone else can chime in as well. I'm wondering if you can speak to the entitlement and the approval process as relates to the city of Baltimore, and is it, maybe you could share some of your highs and some of your lows, and is it done as a jurisdiction wide, or do you notice each area has,
is the city of Baltimore? Is the city of Baltimore
I was like, who's in the room?
Right.
Raise your hand if you work for the city housing department.
Or are there specific neighborhood organization groups that you also must contend with, to move through the NIMBYism and whatnot?
I'll answer really quickly for the land development and approvals process. So we're building 54 new townhouses over by Johns Hopkins Hospital, and thank you. And our civil engineer has shared that it's going to take somewhere between 15 and 18 months for all of the approvals. And that includes Department of Planning, that includes the DHCD, so Department of Housing and Community Development, the Department of Public Works, BGE, your gas and electric, your utilities, your developer's agreement, kind of all of those processes, your subdivisions, your plot maps, everything, to get from purchase and sale agreement all the way to your final approvals, and you're ready to now unearth the ground and start building. And every step of the way, quick shout out to Dave Bramble again. Every question I have, he's great. He answers them, right? He picks up the phone and answers them.
All of us have him as a mentor, I think, which is amazing.
Okay. Hi. My question is, how do I get on the ground floor of real estate projects? Because I grew up in Cherry Hill, and it's changing, okay? And I remember when I was in second grade, they knocked down all of the houses on Veronica Avenue. I'm 33 now. They are just about to start building on that land. It's been just grass for a lot of years. How do I get in that room? Because I grew up there, I see the change, and I want to financially be a part of it.
Real quick, to be on the ground floor, like on the ground floor, and say you have no other anything, you don't got the money, you don't know how to buy stuff. The people who are building on that land right now had to go through that community association, right? When they knocked them down, they probably had to go through the community association. And so one of the things I think is underutilized, other than just reading the newspaper in general, is showing up locally to those community events, the community association events, tapping in with the CDC. There's a lot going on in Cherry Hill because there's a lot of organizing down there as well. So it's, you know, there's a lot of people doing a lot of things, but there is a lot of community-based organizing. So getting in the room with those folks is a really great way to get truly on the ground floor. And from that information, you can also pivot and take some action yourself as well.
I would take it a step further and just say, you're in Cherry Hill right now, correct? Or you grew up, and that's kind of your space of acceleration. Like, you really want to accelerate that area because that's your community. I would say, because, you know, the whole development down at MAG Partners is the new developer now at we call it Port Covington, but it's Baltimore Peninsula. Go on their website. Go on the website and see all the contributors to this development. And go back to their mission. And their mission really is to combine communities together. And they want to hear your voice because they're from New York. They're unaware of what we need here. So if I promise you, if you email them, even if you email me, I'll get it right to the right person because they need to hear what's needed in the community that you love, you cherish, and that you want to protect all the time. So go to the developer, don't just look at the community leaders because sometimes they could be bought, right? Go right to the developer and say, hey, I want to play a role in this. How can I form some level of partnership so I can be the bridge to create the bridge from the gap? So I would reach out to that.
I think just to follow up on that, I don't want it to be lost. One of the really good points from there is this idea, and this is not specifically in response to your question, but this idea of people who are from outside investing and the need and the ability and the access that we provide and people who are like us provide. I see other young developers in the room who have kind of ground level experience. To the extent that you can get in with some of those people, to the extent that we are inviting outside investors into these communities, I think particularly as it relates to real estate, having someone on the ground who is there, who kind of knows, who might be able to like mentor you or can assist you with these development projects is really kind of where you need to start, because again, you really kind of have to have that ground level experience, but you also need to have that experience and the mentoring and the cash and all these other pieces. So don't want it to seem as if we're like dissuading investment, you know, but you know, certainly just want to point that out. All right?
Just do it. Just dig your way. Just dig your way until somebody says yes. You don't have to have all the money in the world. You just gotta have a way to just say, I want this, I can do this, I can do it with you. You are welcome.
How you doing? India mentioned this, the term crowdfunding. So with a lot of people in this room being investors and some outside investors, do you all think that promoting some sort of crowdfunding to the residents that already live in a particular community that needs a lot of help will help them have more community involvement and want to protect and become more of an investor as well as a community resident? Is anything like that available to the citizens of Baltimore to help them get involved and not just be a part of what's being developed, but actually be involved and see it and not just be, you know, watching it and wondering how could they participate in it?
So I'll talk about it. So this is actually from my legal experience. I guess two things I'll point out. There has been one successful crowdfunding campaign that was accomplished for a shopping center by a brother named Lanier Richardson. He actually just started another one for the purchase of Edmondson Village. So those crowdfunding opportunities are absolutely here. but there are certainly other people who are on the ground who are doing even more smaller projects. I can point to the fact that there is a woman that's trying to do that over in Middle East, where she's trying to get people from the community specifically to be able to invest in those communities that they can be the beneficiaries of some of that economic advancement that will happen. So it's definitely happening. You just have to kind of figure out who the right people to talk to about it are.
Hi, all. My name is Kadish Hagley. I'm currently an investment banker at Citigroup. My quick question for you all is, I'm from Brooklyn, New York. I moved here in 2021. Love Baltimore. My question for you is, how do you guys think about the Baltimore population question? You know, typically it seems like for the past decade, like Baltimore's population has been in and around 600,000. Depending on which data set you look at, it's been slightly trending downward. How do you guys think about that and shift your mindset and get over that?
So there was a report that just came out. I did like this whole YouTube thing about it, but population, there's no doubt, right? You look at any chart anyway, right? It's lower. This was billed as a 1 million person city. Now we're sitting around 500,000. And so what I think, we know that there's people who are transitioning because there's so much happening, and there's a lot of, you get jaded over time, to be clear. But I think what we don't talk about enough is the number of households has increased. So what's actually happening behind the data is that we're seeing more people with children moving out of the city. And so the average household size was 3.4 and now it's 2.8. And so there's when you're talking about data, a lot of times, and you as a banker, you know this as well, right? You have to understand, one, who's sharing the information, like what is their goal, what's their intention, but also what is all the data telling us full circle. So I think what, to me, right, in my opinion, what the data tells me is that there's a lot of work for us to do, right, from a residential perspective, and for the live, work, play opportunities to keep folks here. There's opportunities to really not only improve the school system so folks aren't leaving with their children, but also make sure that the beauty in public schools in Baltimore City are also highlighted, so we're not only telling one side of the story. But it's like that's the challenge and the beauty of the opportunity in Baltimore, is that there's so much complexity in everything that's happened and has happened over the last hundreds of years. So that's mine.
And on the residential side, because that's where we start, that's our base, we got to spend more time making people qualified buyers. We spend too much time running people through houses. We don't spend enough time making them qualified buyers, which don't make them bankable to you, the banker, because we don't know economically the unit economics behind being a qualified buyer. And we don't allow them to become the money and be the money, because we don't invest enough time in teaching them about the importance of home ownership and how to become qualified so they can come to you and come to everybody else, especially in that financial arena.
And to speak on the population, so when we were at BDC, we noticed that Baltimore had 1 million plus residents at some point. We're less than that, and those less than 600,000, like across the board taxes wise, maybe a half, like actually own homes, pay piggyback taxes, payroll taxes. So that's where we get cheap property, but high property taxes, right? Because we're still right size for 1 million people in the city as far as services, but we're not serving 1 million people, right? We had over 100,000 kids in the school system. There's, 80,000 now? Maybe less? So that speaks to the numbers and kind of where the stress test is.
I will just, as we wrap up, I will just say, though, that you have, from my standpoint, you look at the opportunity in Baltimore, and as Mr. Bramble was speaking about what is around us, I think Baltimore presents a unique opportunity, because the reality is that in places like DC, the prices are, I saw a property walking by, a 1-bedroom apartment, $350,000, as low as the low 300-something thousands, right? Those are things that are gonna impact as people get priced out of those neighborhoods. As we build it, they will come, on our Kevin Costner. So with that, I would like to thank you all for being with us today. I know that we have to wrap, but I think we'll be around. And to the extent that you want to be a part of the Take the Bus tour, please come see me after the panel. Thank you all.
Thank you.